Welcome to the deep dive. Adobe just dropped their latest financial results.
Okay.
This is for the second quarter of fiscal year 2025. And, well, everyone's watching pretty closely to see if this big bet they're making on AI is really starting to show up in the numbers.
Absolutely. And for this deep dive, we've gone right to the source material you shared. We're digging into the official earnings report, the conference call transcript, the real stuff.
Right.
Our mission today really is to cut through all that data, all the jargon, and figure out what these reports actually tell us about how Adobe's doing right now. How is that AI strategy playing out? What might it mean going forward? Basically, what are the key things you need to know from all this?
Okay, let's dive right in then. Those headline numbers. The report kicks off with a big one.
Okay.
Record revenue for Adobe in Q2 FY25 came in at $5.87 billion.
Yeah, and that's not just, a big number floating out there. The source material points out this is an 11% jump year over year. And that holds true whether you look at the reported number or in constant currency. So pretty solid growth, especially for a company their size.
And it wasn't just meeting expectations, right? They actually beat them. Top and bottom line. Non-GAAP earnings per share that's often a good measure of core profitability, kind of smooths things out.
Right, takes out the one-offs.
Exactly. That landed at $5.06, which was better than the $4.97 analysts were forecasting.
And the revenue, too, it edged past what the street was expecting. They thought maybe $5.8 billion, but it came in right at that $5.87 billion you mentioned. So, yeah, a beat on both fronts.
And beyond just hitting those targets, the sources really emphasize strong underlying financial health. We're talking like really impressive gross profit margins. What was it? Around 89.15%.
Yeah, very high. And they've kept up consistent profits over the last year, too.
Plus, strong cash generation. Cash flows from operations were $2.19 billion. The report specifically calls that out as a record for Q2.
That's always a good sign. Strong cash flow. Healthy business indicator.
Okay, so the numbers sound pretty great, don't they? Revenue's up, profits look good, cash flow hitting records. But here's where it gets, well, really interesting.
Uh-oh.
The source material mentions that even with beating both EPS and revenue forecasts, the stock actually dipped slightly, like 0.3% in after-hours trading right after the news. It closed at $411.06.
Yeah, that does seem a bit counterintuitive, doesn't it? Usually good news pushes a stock up.
Right.
The reports themselves, they don't spell out a specific reason for that little dip, but you know how markets work. It could just be that maybe unofficial expectations were even higher somehow, or maybe some profit taking after recent run-ups. I mean, the stock is still trading well within its 52-week range. What was it, $332 up to almost $588?
That's true. Context matters. And speaking of context, the Investing Pro data that was included gives Adobe a good financial health score. It calls out that profitability and cash flow specifically, and it flags a PEG ratio of 0.58.
Right, the PEG ratio compares price to earnings and growth. A number under 1, like that 0.58, sometimes suggests a stock might be, potentially undervalued compared to its growth prospects, even with a bit of stock volatility.
So maybe a muted immediate reaction from the market, but the underlying financials, according to that score anyway, still look pretty solid.
It seems that way.
Okay, so we've got strong core numbers, maybe a slight market head-scratcher right after the announcement, but generally the report paints a picture of a healthy, growing company. Now, let's shift gears to the core strategy. The sources really hammer this home as the engine behind the growth, merging creativity and productivity and using AI as the accelerant.
Yeah, that theme is definitely woven throughout the reports. Adobe's vision, the way they describe it, it's pretty ambitious. They want to bring high-end creative tools and productivity stuff to literally billions of users, not just the pro.
Billions, wow.
Yeah, and make it all work everywhere, mobile, web, desktop.
And they see AI as just fundamentally changing things, opening up, what do they call it, content floodgates.
Exactly, because AI makes it so much easier, so much faster to actually create stuff, edit it, stick it together, get it out there.
Yeah.
The CEO, Shanu Narayan, he's quoted directly in the transcript saying, "Creativity and productivity are merging. AI can make them more creative and productive in their business context." That quote really nails their strategic direction, I think.
Okay, let's see how that strategy plays out across their different business areas, their segments, and different customer groups. The report gives us a nice breakdown. First up, the big segments, digital media and digital experience.
Right. Digital media, that's the big one. Home to Creative Cloud, Document Cloud. Think Photoshop, Illustrator, Acrobat, all that.
Mm-hmm.
That brought in $4.35 billion in revenue, growing 11% year over year, or 12% if you adjust for currency fluctuations.
Right.
And they ended the quarter with $18.09 billion in ARR, annualized recurring revenue. That's like the predicted yearly income from current subscriptions. That's up 12.1% year over year. Solid.
Then you've got digital experience. That's more their marketing, tech, analytics, customer journy stuff. That did $1.46 billion, up 10% year over year.
And within that, the subscription revenue was $1.33 billion, up 11%. The source material actually calls Adobe the largest provider in this whole category.
Interesting. Now, what about the customer groups? That gives another angle.
Yeah, it does. The group they call business professionals and consumers that delivered $1.60 billion in subscription revenue. And that showed really strong growth, actually 15% year over year.
15%, wow.
Yeah. And then the sort of traditional creative and marketing professionals group, that's the bulk of it, $4.02 billion in subscription revenue, growing at a solid 10% year over year, or 11% in constant currency.
Okay.
But here's something really noteworthy from the call transcript. They talked about acceleration within that core creative business.
Oh.
Management pointed out that the subscription revenue growth, just within that creative and marketing professionals part, has actually picked up speed over the last 4 quarters. It went from around 7.9% back in Q2 of 24 to 10.1% now in Q2 of 25.
So it's getting faster.
Exactly. And they explicitly see this acceleration as like key validation. Proof that their strategy to retool the business around AI is actually working. It's paying off.
That acceleration point is really important, isn't it?
Yeah.
It suggests the AI stuff isn't just, bolted on selling new things, but it's actually boosting the core business growth rate.
Yeah.
Let's really dig into some of the specific AI products they mentioned and the momentum they're seeing. The source materials has a lot of detail here. This is where we see that acceleration kind of come alive.
Okay, yeah. A prime example they highlighted is this combination of the Acrobat AI Assistant and Adobe Express.
Right.
The sources explain how they work together. So Acrobat AI Assistant uses AI for, let's call it consumption. It helps you quickly pull out insights, summarize dense documents, ask questions about a PDF just using plain language. Then those insights feed directly into creation. You can instantly take what you just learned and use Express to whip up a presentation, social media posts, flyers, whatever.
Yeah, I can picture that. They mention use cases, right?
Yeah.
Like a salesperson summarizing market research in Acrobat, boom, turns it into a presentation deck in Express.
Exactly. Or a small business owner sees customer trends in a report, generates social media ads in minutes using Express.
That makes sense.
And the adoption numbers for this combo, they're kind of staggering. It really backs this up. The combined monthly active users, MAU, across Acrobat and Express together, over 700 million.
700 million.
Yeah. And that's up 25% year over year.
Wow. That's huge.
It is. And get this, the adoption of those Express creative features inside Acrobat, that grew roughly 3x just quarter over quarter and 11x year over year.
11 times.
Crazy growth.
Yeah.
And the Acrobat AI Assistant itself, the MAU for that, is up over 3x year over year. The number of questions people are asking it nearly doubled just in the last quarter.
Okay, so this clearly seems like a big driver for that 15% growth we saw in the business professionals and consumers group. Makes sense.
Totally aligns. It's the quantity part of their monetization formula we'll touch on. And it's not just individuals. They're seeing strong business adoption, too. Added over 35,000 new businesses in Q2. Express alone brought in about 8,000 of those. That's a 6x increase year over year for Express business ads. Students are getting access, too.
Okay, what about Firefly? That's their main creative AI.
Yeah, Firefly. They position it as their creative AI destination. Basically, its job is to blend right into the Creative Cloud apps, Photoshop, Illustrator, etc., and make the whole process of coming up with ideas, creating things, producing them, across images, video, audio, vectors, design, just faster and more, intuitive.
And they really stress the commercially safe angle, don't they? Especially for businesses.
They do. That's a key differentiator they keep hitting on. The idea is their models are trained on licensed content, like Adobe stock photos. So users creating stuff for commercial projects have more confidence about, IP safety, transparency, less legal worry.
Right, which matters for businesses.
Big time. And they're not locking themselves into only their own models either. The reports mention they support third-party models, Google, OpenAI, Black Forest Labs, more on the way. They've also launched new stuff like Firefly Image Model 4 Ultra, and their video model is now generally available.
And the momentum there.
Also really strong. Firefly app traffic up over 30% quarter over quarter. Paid Firefly subscriptions nearly doubled quarter over quarter. And new subscribers coming to Adobe overall grew over 30% quarter over quarter, and they specifically credit Firefly for driving a lot of that.
Wow. And the total usage numbers.
Get this, total cumulative generations using their AI features crossed 24 billion by the end of Q2.
Billion with a B.
Billion with a B. And they're also seeing strong demand from enterprises for dedicated Firefly services and the ability to build custom AI models for specific company needs.
Okay, so that covers the creative and the sort of document productivity side. What about bridging that into the marketing world? That's where Adobe Experience Platform, AEP, and GenStudio come in, right? Part of that digital experience segment.
Exactly. Think of AEP as kind of the central brain. It pulls together all the customer data, lets you get real-time insights. And GenStudio, that's like the AI-powered content factory for marketing campaigns.
Okay.
Together, the idea is they unify the whole workflow, from creating the actual marketing asset all the way through planning it, managing it, delivering it, activating it, and then reporting on how it did. A single flow.
And GenStudio is helping make ads for places like Google and Meta.
Yeah, GenStudio for performance marketing specifically helps create and optimize ads for all the major platforms: Google, Meta, Snap, TikTok, you name it. The goal is to use AI to make that whole complicated process of getting the right ad content to the right customer much smoother and more effective.
Do they give examples?
They do. They mentioned Project Vision with Coca-Cola. Adobe actually co-developed that using Firefly services and custom models. The whole point was to help Coke scale up their creative production massively while making sure everything strictly followed their brand guidelines everywhere.
Ah, interesting. Scaling and brand safety.
Right. And AEP itself is getting smarter with the AEP AI assistant. Lets marketing teams just ask questions in plain English about their data to find insights or create audience segments without needing to be, a data scientist. They're also rolling out native AI agents that can manage customer journeys in real time.
And are customers using this stuff?
Yeah, seems like it. The NFL is expanding their partnership. Companies like Wegmans, Dentsu Merkle, they're using the product support agent feature, and the growth numbers reflect it. AEP and related app subscription revenue is growing over 40% year over year.
40%.
Yeah. GenStudio ARR growth is over 25% year over year. And that crucial bit, the Firefly services and custom models within GenStudio, that's seeing 4x year over year ARR growth. 4 times.
Wow.
And Neil Chakravarthy, he's the president of Digital Experience, he made a pretty bold claim in the transcript. He said, Adobe is the only company unifying the entire workflow from creation and production, workflow and planning, asset management, delivery and activation, through to reporting and insights.
That's a strong statement. That integrated workflow from the initial creative idea all the way to the final marketing report, that does sound like it could be a pretty big advantage, especially for larger companies. Okay, let's wrap this up by looking at how they actually plan to make money from all this AI stuff and what their outlook is for the rest of the year based on the reports.
All right, the monetization strategy. They use this little formula, PXQ plus V.
P times Q plus V.
So Q is quantity. Think about those hundreds of millions of users on Acrobat and Express, the growing number of people using the Firefly app, just sheer volume of users.
Got it.
P is the price opportunity. That comes from adding more value into their products, especially pushing people towards the higher tier Creative Cloud Pro plan as they bake in more AI capabilities. More value justifies potentially higher prices or upgrades.
Makes sense.
And V is value creation. That's mainly about the automation and the custom solutions they offer through things like Firefly services and GenStudio, particularly for big enterprise clients, solving specific high-value problems.
So they have different levels, right? Express for beginners, Firefly app, then Creative Cloud Pro, which they see as the main target for serious creative pros.
Yeah, they position Creative Cloud Pro as the sweet spot for professionals, especially as more AI features get woven in. And they mentioned this rollout happens as customers come up for renewal.
Okay, critically, how does this AI stuff connect back to the actual dollars?
Good question. They said they are tracking ahead of their target to hit $250 million in AI direct annual recurring revenue by the end of this fiscal year, FY25.
Okay, $250 million direct AI ARR.
Right, and that's important because that number represents new business, revenue generated specifically by these new AI products and services.
But the impact's bigger than just that $250 million, isn't it?
Oh, much bigger. They call it AI influence revenue. That's the boost AI gives to their existing products, driving more usage, getting people to adopt more features, like those 24 billion Firefly generations we mentioned, or Express exports crossing 1 billion. That influence, they say, is already worth billions in revenue.
So AI is both creating totally new income streams and making their existing business stronger.
That's the narrative, yeah. It's a tailwind for the whole company.
What about competition? Do they touch on that?
Briefly, they acknowledge, down market competition for things like Express and this idea of co-opetition with platforms like Meta, where Adobe tools help create ads for Meta's platform.
Right.
Adobe's main counter, especially when talking to businesses, comes back to that commercially safe AI argument. Models trained on licensed content, like Adobe stock. They position that as a key advantage for companies worried about IP risks.
Okay, so based on all this performance, this momentum, they raised their targets for the full year.
They did. They're now aiming for total revenue between $23.5 and $23.6 billion for fiscal 25 and non-GAAP EPS between $20.05 and $20.07. They also reaffirmed their target for digital media ARR growth, keeping it at 11% year over year.
Solid outlook then. Of course, they have to mention risks too, right?
Always. The source material lists the usual suspects: potential
Yeah.
market saturation, broader economic pressures, just the rapid pace of tech change, competition heating up even more, and of course, potential future regulation around AI. Standard stuff they have to watch.
So if we step back and look at everything in these reports, Adobe's Q2 looks financially strong, they beat expectations, and there seems to be real significant momentum driven by this AI strategy across all sorts of different products and customer types.
Yeah, the sources definitely paint a picture where AI isn't just some side project. It's fundamentally reshaping their core products. It's driving adoption, creating new revenue, influencing existing revenue, all aimed at this big vision of merging creativity and productivity for, well, potentially billions of people.
Okay, so given everything we've unpacked today from these reports, and really thinking about Adobe's stated goal here, merging creativity and productivity with AI for literally billions of users, everyone from business folks to top-tier creative pros, here's maybe a final thought for you, the listener, to chew on. How do you see AI fundamentally changing things in the next year or so? Not just what gets created, but really shifting who gets to create it, and maybe just how incredibly fast they can bring their ideas into the world.